Good afternoon, everyone. In today's video, we'll take a look at the volatility inside of the four major index markets that includes the S&P, the Nasdaq, the Dow, and the Russell. And once we take a look at the broader market volatility, we'll also move into particular stocks, things like Airbnb and Square. Those are two that stand out, and we'll look at a few other tech stocks as well. Now, starting first with just what the market looked like, the morning period here, after the initial sell-off post the opening bell, was met with a pretty strong rally inside of the major index markets. Now, in that rally, we had a few pullbacks. You had pullback 1, pullback 2, pullback 3, and finally that last pullback, which really didn't lead to any further higher highs from that point. You could argue this was a double top. And after that double top, which ended the post lunchtime hour here, so 9 to 10 a.m. Pacific, lunchtime ends. As soon as lunchtime ended here, you can see the volatility picking up with the sell-off inside of the broader markets. Now, the same pattern was true inside of the Dow, inside of the Nasdaq, and inside of the Russell. Now, with the volatility still across the board, the charts looking somewhat similar, we had one setup leading up to that 10 a.m. mark, and that was inside of the Dow here. So let's start to load in first our futures volatility box models. And we were on the scalper leading all the way up to that post-lunchtime volatility. Now, the one setup that triggered inside of the Dow was when price action breached the upper edge of our volatility box clouds. This was in that 7 to 8 a.m. Pacific hour. So 7 to 8 a.m. Pacific, we had price action breach the upper sign entry line. We had the edge signal confirmation once and twice, along with opportunities to enter at the sign line. Our fade setup rules were met. In terms of our risk, stop was outside of the clouds. The distance we risked is what we were looking for with regards to our first target. And that inside of the Dow was about 50 points, and we ended up making a max move of right around 71 points. So a little bit more than T1, but we fell short of T2. Now that was it with regards to index volatility leading up to that post lunchtime hour. Now we take a look at what price action looks like. Really 10 o'clock all the way up till 10:14, we had that last little rally. 10:14 was the first edge signal inside of the Dow, and really after that there was no looking back. And all of the index markets look something like this for that 10 to 11 a.m. Pacific hour. Now across the board here, we had to adapt to volatility. We broke outside of the scalper, broke outside of the aggressive, broke outside of our doomsday aggressive models. The conservative models were the ones that were being respected. We had the bounce from the conservative, but with the edge signal printing, we never got a retest. So per our rules, the setup rules weren't met here, but we did see the bounce. We hit that T1 mark before then getting a retest, and that finally took us to our doomsday conservative models, where you can see here price action broke even outside of the doomsday conservative. So the moral of this is, with regards to volatility, we had the one setup in the Dow in that 7 to 8 a.m. Pacific hour, and after that, much of this volatility here happened very quickly with some pretty large candles that were expanding on the way down. Now, with those candles, while we didn't have setups in futures markets, we did have certain stocks that gave us some fairly nice setups here. And those all hit the overlap tab on our live scanner. Let me pull that up. So here's our live scanner. I'm on the overlap tab. And if we take a look at some of the stocks we had, so in the morning you had the likes of Robinhood. This was early on in the morning. Then we had a whole series of gold and metal stocks that triggered on our live scanner. And leading up to really that 8 to 9 a.m. Pacific hour, so right before the lunchtime, we had Square, Workday, Airbnb, and DoorDash, all of which triggered on the overlap tab. The overlap tab inside of our live scanner means we're breaching the hourly and the daily volatility box model. So it's a double whammy. There's multiple reasons why we think that particular stock is extended and is likely to see a bit of a correction inside of that stock. So let's take a look at each one of those four stocks now. So let me load in Airbnb here first. I'll load in our stock volatility box models. I'll load in our two sets of daily models and our two sets of hourly models, the aggressive and the conservative. And for our indicators, outside of that, I'll load in the edge signals and the extended Keltner channels. Now, using just these sets of models, the volatility models and those indicators, we can paint a pretty clear picture of where price action exhausted and where price action then reversed. Now let's start with Airbnb, where I'll spend a little bit more time before we then go through the other stocks a bit quicker. Airbnb hit our live scanner around that 8:30 mark, where you can see price action breaches both sets of clouds here. We have the longer set of clouds that are expanding the entire day. Those are our daily models. And we have each hour's models as well. These are the new hourly models we have for stocks. This right here is the aggressive. This right here is the conservative. Now, Airbnb hit our overlap tab when price action breached both the hourly models and the daily models. You can see that happening right here. That was right around 8:30 a.m. Pacific, so 30 minutes before the lunchtime hour. And even during the lunchtime hour here, you can see we just chop around sideways. We've covered this extensively in the video where we talk about should you trade that lunchtime hour. So if you haven't already seen that, that might give you some more insight around that 9 to 10 a.m. mark. But as soon as that period ends, that lunchtime hour, you can see volatility picks up inside of Airbnb, taking us down to that next hour's volatility box targets to the downside. So here we have price action where if I switch this over, I think a 5-minute chart just allows this to be as clean as possible. 5-minute chart, we have price action hit the upper edge of both sets of models. This appears on the overlap tab right around 8:30. We have the Keltner channel stop printing. We have 1 and 2 edge signal confirmations telling us we're officially in overbought territory. We're looking for a reversal now. And really after that second edge signal, right in the middle of the lunchtime hour here, price action then starts to sell off pretty dramatically with the overall index market supporting it. Now, if we switch gears to Square next, same sort of idea here inside of Square. This should be a bit more familiar now. Price action breaches both sets of upper models, appears on the overlap tab. We have the Keltner wedges that stop printing, chops around sideways during the lunchtime hour. We get the edge signal confirmation. This is on the 5-minute chart, but you can zoom in if you're a little bit more aggressive too. And ever since then, we have a sell-off here, which takes us all the way to the other side's daily models as well, triggers an overlap on the other side for another bounce into the close. So Square here, a little bit weaker compared to Airbnb, but the same setup, same idea here. We breach both sets of models, stall for a bit, chop around sideways, get the edge signal confirmation, and then see the sell-off taking place. And for the reverse entry, same idea here. The Keltner channel wedges stop plotting, chop around sideways, get the edge signal confirmation, this time to the bullish side, and we have the rally into the close here, the final hour. Now we also had Workday that triggered, same setup inside of Workday here, hits the overlap tab, chops around sideways, we get the edge signal confirmation a little earlier here, and ever since that point, we then have the sell-off once the overall markets start to sell off as well. And then finally, the one stock which gapped up even post earnings, if we zoom out first, DoorDash. After earnings, we had a gap up. A lot of wicks to the upside here. Let's zoom back in. 5-minute chart here. Price action breaches the overlap tab. We have the Keltner channel wedges stop printing. We have our one edge signal confirmation. DoorDash, unlike the others, does break to a new high before finally flushing down lower. So DoorDash here was a stop, but Square, Airbnb, and Workday give you an example of the flip side where that volatility was a bit more contained. We stayed inside of our models here, and we had that flush with Square really looking like the weakest one out of the bunch that we just discussed. So coming back to summarize the volatility today, we had really the markets rally to begin with. Inside of that rally, the S&P, the NASDAQ, and the Russell all had slightly stronger rallies compared to the Dow, which gave us that one little pullback, which we were able to take advantage of. This was in the 7 to 8 a.m. Pacific hour, where the Dow breached our scalper volatility box models. We had a bit of a sell-off from there using that 1-minute chart that allows you to zoom in a little bit more to snipe some of these scalper sort of trades. If you're not a futures trader, but instead we're looking for stock trades, that's where the live scanner came into play, and you had a lot of options to choose from even on just the overlap tab. We talked about Square, we talked about Workday, we talked about Airbnb, and we took a look at DoorDash as well. So 4 different tech stocks, all really setting up around that 8:30 a.m. Pacific mark. And since then, we had price action chop around sideways, and then finally, with the broader indices selling off, these stocks started to follow suit as well. If you were looking for earlier entries, you had the likes of Robinhood, you had some other gold stocks that triggered in the morning, you had FCX, so FCX, ZTS, variety of different stocks from different sectors, all breaching the overlap tab today based off of the volatility we saw in the broader markets. Hope you found this video useful. Again, helps to bring together a picture of futures and stocks using volatility and volatility models to make sense of all of this price activity, all of these different candles that we see every single day. I'll leave some videos in the description box below which break down each one of these setups, the overlap tab in a bit more detail, the hourly models, all of that good stuff. Take care everyone, good luck trading, and I'll see you in the next update.